Good morning, guys. How are we all doing? Happy Friday, everybody. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So what kind of tomfoolery is this that we have going on? So yeah, what an absolute squeeze to the upside. Obviously we had a dump on what happened in the Ukraine, and then we had a big a rally when basically Biden realized he couldn't actually impose sanctions on himself effectively. They were obviously they're technically directed at Russia, but Russia has been spending the last 8 years basically insulating itself from basically as much of the effects of American sanctions as they can, which obviously still would be bad for them and their economy, but ultimately with inflation running haywire, and the impact it would have on gas, oil, just the energy complex as a whole, it would basically cripple the US. What we have seen is that Biden has basically realized he can't put sanctions on himself, cripple his own economy as much as he would love to. Don't get me wrong, these guys are these military industrial complex swamp creatures are warmongers, and they don't care about inflation for normal people, but obviously at this point the normal person, aka the frog, is acutely aware of the swiftly rising temperatures that they are being boiled in. So another swift impact on that is definitely not gonna help. Speaking of swift, obviously that was obviously one of the big things that people were fearful of. That was what the market was pricing in. The chances of obviously Russia being kicked out of SWIFT, which would cause all sorts of mayhem worldwide, and it would be very difficult to predict how the dominoes would fall after that one. And it is definitely not certain to say that it would be beneficial for the US, and it is almost it's almost certain it would ultimately definitely prove not beneficial for the US. So yeah, very interesting times. The absolute mother of all squeeze, as you can see. This did kind of obviously does look like a pretty aggressive capitulation dump. We see it obviously in Bitcoin. We see it clearly in the stock market, even more clearly. So after obviously all this continued prolonged down price action, to get a pretty decent capitulation dump, and then what is relatively good news for the markets. Good news for the markets that basically the US is not going to take a hard line. Yeah, I mean, you can see we had a nice bounce. Looking at charts alone, though, the S&P needs to obviously get back above this resistance area. That's obviously where we got this support. We came below, we obviously came back up, and that's where we ran into resistance. But that is a perfectly normal area for us to meet resistance, and unfortunately it's a perfectly normal area for us to then get rejected and continue on downwards. But however, we are obviously politically driven at the moment. So if we do find ourselves back above 4,300, we then pretty much have a good chance to getting above 4,400, I would say. Maybe not immediately, but into next week, and then we could probably put this iteration of market weakness based off the Ukraine. We can probably put that to bed. I mean, if you want to sum up the situation, I know there's all sorts of wild media speculation stroke propaganda saying Putin wants to re-establish the the Soviet Union boundaries and all that wild stuff. It literally doesn't. All it wants to do is basically maintain the either neutrality or Russia bias of the Ukraine. Basically, it doesn't want the obviously the pro-Western influences and NATO basically there in the Ukraine, which is basically understandable. So what I am saying is that there is no wider goal, wider expansionist aims for Putin. He literally doesn't even want to necessarily take over the Ukraine. He just wants to basically stop them from joining NATO. And at the end of the day, we all know, it is common knowledge, it is a fact, it is a fact in the history, but the annals of history, not that it's that long ago. In 2014, there was a democratically elected, very pro-Russian government that the US State Department didn't like, and was instrumental in toppling and installing a pro-Western government. So that is literally where this all began. And this is just eventually the corner that Russia's been backed into. So that is that. So this is why markets potentially have a good shot of recovering, because we have now shown that there is no real appetite for war, as there should not be. There should never be appetite for, not in this day and age. Things will get too hectic pretty quick. And I think there's a saying that I don't know what weapons World War III will be fought with, but I know World War IV is going to be fought with basically rocks and sticks, and obviously you can understand the meaning of that. So yes, stock market's at an important level. If we can bull flag this out and break above, happy days. We'll be onwards and upwards. If we do also look at the impact of basically of Biden's thingy, you can see gold made a very nice move up and then retrace all of it and some. To obviously this important level that we're at. We got to join in this previous high here, almost the tick, but a little bit above, and then we are settling higher. I did kind of say this, that ultimately I think gold will establish a high value relationship now. It will potentially, I believe, no longer be looking at down in these areas, which I'm sure Peter Schiff will be very happy to hear about. But I think another thing gold has got going for it now is that obviously I think the Fed is going to struggle to be as hawkish now as the market has been previously pricing it in. I mean, obviously I haven't been pricing that in my mind because I know that they can't really do much, but now it's even more likely that they can't really do much. So obviously that is going to be a positive for gold. Dollar index only really easing off a little bit. I mean, this is again a relative trade. Don't forget, most of this is against Europe. Don't forget, Europe is right where all this is kicking off. So maybe the euro is going to struggle on the backdrop, in which case it's going to be beneficial for the dollar. But it's difficult to read a lot into this because obviously it is a relative trades. I mean, if you actually want to look at the price of the dollar or currencies, look at them like against assets such as oil or such as gold, and or such as even the stock market. Look at them against things like that. Oil also similarly having a pullback, but again, oil is structurally bullish. Just obviously a wake up on that and a pullback. It is structurally bullish, but it's obviously establishing a higher value relationship relative to where we've been, but yeah, it can still just have a decent pullback, but like I said, we know all the ESG stuff, and is ultimately going to drive us up onto those policies. The error of those ways are seen and things potentially change, which may never happen. Bitcoin dominance, as we would expect, doing well. It was looking like we're going to try and break down, but obviously this risk and uncertainty clearly it obviously impacts all cryptos pretty much worse than Bitcoin, i.e. the dominance goes up. A bit of a long-winded way of wording that. Nascoin having a pretty aggressive rally, as we can see down here. But yeah, I mean, still not looking ideal. We have got a horizontal. We probably need to draw in here. Obviously, we've not really been looking at prices this low for a while. But yeah, a horizontal we can draw in here. Yeah, similarly, if Nascoin gets above here, it can then try and get above here and then potentially look good again. The US 10-year, interesting still to see it under 2%. Obviously good. I think we were saying up here that this is potentially topped out. It will come back. People are calling down to the 1.6 handles. I mean, I could definitely see that. just in the face of just how difficult things are going to be going forwards. Let's not kid ourselves. We are probably going to have some sorts of troubles with Taiwan as well. I say we, the royal we, the cumulative we, the world as a whole. That we is going to have problems with obviously China deciding to take Taiwan, which I mean. Energy prices is one thing, and obviously Russia being a big commodity and energy producer. I mean, Taiwan is literally like the global hub for semiconductors, and honestly, if they like, we've already seen what's happening with delays with cars. If there starts to be issues with those, which there already is, if there starts to be more issues with those, I mean, honestly, this is bleak. It's looking bleak for just the world economy. Like, globalization is basically on the back foot now. Globalization has driven a lot of obviously the beneficial advances in obviously supply chains and consumer products, everything basically. It's helped everything, even the exportation of basically factories, and then the utilization of cheaper labor in different countries, all part of globalization. That is all basically on the back foot now, and that is hugely inflationary. Hugely, it's hugely a word, I don't know, it's massively inflationary. So yeah, we've got a pretty difficult backdrop. At the end of the day though, the US took advantage of the world after World War II. Basically, yeah, like I said, took advantage, and it took advantage of too long. The world has pretty much got fed up of its ways, and they are in the what are pretty much the death throes of their world dominance, influence, power, even world reserve currency status to a certain extent. So interesting times. So yeah, let's have a look at these stochastics, which were looking particularly dire yesterday, but 4 hour turning up and moving up and got room to run. I mean, this is what we need. We need to hold here and break above. That's what we need. That is what we need for Bitcoin, and then we will actually start to look pretty good technically. Similarly, the 10-hour stochastic has been weird. 10-hour stochastic is moving up and got plenty of room to run. 12-hour turning up and moving, got lots of room to run. Daily turning up from a low level. Buy daily still coming down, losing a bit of its downward curvature though. 3-day had just recently turned over. 5-day still pointing up. Weekly, obviously, it's got all the parts to run into. I mean, if things do start to settle down, the Fed does start to. I say the Fed obviously start to. When I say the Fed, what I mean is the market's perception of what the Fed will do. If that starts to ease off as well with the rate hikes, then yes, this weekly could really get us going back to new all-time highs. Bi-weekly coming down, monthly coming down, as we know. But yeah, all in all, you just gotta look at the chart and think, right, if we get back above here, if we get back above 40,000, the big psychological $40,000 number, obviously, I mean, look, you can see it coming into play there. As soon as you tick 40k, the big sells are coming in. But yeah, back above there, and then get back above probably more importantly 42. Yeah, we can start to look good. This being obviously the higher low relative to this higher low, and then yeah, look for higher highs and onwards and upwards. So fingers crossed things don't escalate. Like I said, you'll see a lot of rhetoric, a lot of propaganda trying to demonize Putin and stuff, but he's not trying to re-establish the Soviet Union. He's basically just trying to have the buffer zone of the Ukraine, which obviously the West and NATO and I mean, it's mainly driven by the US. Actually, Europe, Germany has previously had quite good relations with Russia. It's just the West is just over there jealously looking on, thinking like, oh, Europe's got a new friend. I don't like this. Let me cause trouble at any cost. But yeah, that is it, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.